What's up, guys? Welcome back to the channel. Today is all about analysis. I'm going to show you what I use in my trading, what you can use in your trading, and what are the most important points to look at in a chart. So let's get started. All right, so we are looking at the Euro-Canadian chart. And as you guys know, I trade mechanically. I wait for my setup and I take it regardless of the location. But if we take a look at Euro-Canadian right now, and if we look at the weekly time frame, what do we know? What do I always speak about? Highlight areas of liquidity. This important swing low is an important area of liquidity. The same thing with this high. Look at that. This high, took it out, price fell down. This high, price shoots above it and then rejects. This happens over and over again, and it doesn't always happen perfectly, but this is the basic premise about my trading. I also use accumulation and distribution from the Wyckoff method. And if we take a look here, we take out the low and we reject. And then again, we take it out and we quickly reject and close above the range. Now, if we go to the other time frame, we are seeing clearly an accumulation range. This is the range. Price takes out the low of the range. Usually you will get a follow through. So I was already long, but I got stopped out because I was a bit early. And then again, and now we break above the high. And what's interesting is that we stay above there. And that's always what I tell people is when they trade the Wyckoff method is on both sides of a range, you will have liquidity resting. So here is liquidity resting and here is liquidity resting. And you want to see what happens once it takes the liquidity out. Here, price goes into it and immediately when price closes there, 2 days later, price shoots up. Here, price goes into it, falls down, but then again, just closes above that high of the range. And then another day we stay above here. And another day we're staying above here. And another day we're staying above here. And that just tells you that if there's liquidity, that there's a completely different story going on there in terms of how the liquidity is being absorbed there. So in my opinion, this is your accumulation range. Can we have a retracement? Yes, we can, because we can retest this area. But I do see bullish price action in the Euro-Canadian the coming weeks. Two reasons: because we are having that false breakout at this key swing low, and because we have that accumulation range on the daily time frame. I expect something like this to happen in the Euro-Canadian. And if I get a long setup, of course, I take it all the time. But if I get a long setup anywhere in this area, the odds of winning increase. And I will definitely risk more on that particular trade. So that's what I want to talk about on this particular pair. And it happens over and over again, guys, in terms of the liquidity. Key swing high, taking it out, price going down. Key swing high, price takes it out, price goes down. It happens over and over again, and you can really build your edge around this phenomenon. So let's take a look at another pair. All right, so we're looking at gold, and I'm not sure why so many people told me yesterday that they were buying gold. I didn't see anything there. I didn't see a setup. I didn't see a level. So a bit of a surprise there. But if we take a look at what has happened in gold, we got 3 equal highs. Price breaks them, retests previous structure that was quite important. It took out these equal highs, formed a distribution range and fell down. And we are doing the exact same thing. But now we're taking out multiple highs, forming a distribution range and collapsing back through the level. And a lot of people were buying in this area, and I'm not sure why, because we've got a double bottom below market. And what we do know is that when price takes out one side of a range, it tends to move to the other side of the range. So we took out the high of the range, and this is where liquidity is resting below market, and price then tends to move to that area of liquidity before making an up move. So I think buying in this area is not the best idea. I don't get why people do this. But if you just highlight areas of liquidity on your chart and just see what happens to these areas, this is a clear double bottom. You can expect price to go there, especially after this here, this touch just above that level. If we get this and then this, then I get why people want to be buying. But buying here just before the liquidity is being triggered, in my opinion, is not the right thing to do. So that's what I will be looking for in terms of gold. I don't have any setup right now. I'm just waiting. I do have to say my strategy on gold is different than on FX and indices, mainly because I noticed that gold behaves a bit differently. In the FX market, I trade the breakouts. So I wait for this, and then my entry is at this point. In the gold, I enter here. So I enter it after the false breakout and not after the real breakout, simply because I've noticed it works better if I enter in this area in gold. So that's a little tip right there for you guys that are developing an edge, a strategy, that you should consider that different markets have different behaviors, and that sometimes a strategy that you use in one particular market isn't going to work exactly the same in another market. The concepts I use in all the markets are the same, but the way of trading it is a bit different in gold compared to FX or indices. So that's something to think about when you want to be trading. All right, let's take a look at GJ. I've highlighted the discretion TP. It's from my trades that I took. I took 2 shorts in GJ, both in this area. My target was this low, which already has been hit. Now I'm already out of the trade. But what I do journal, which is also a quick tip right there, I'm giving away all these nuggets for free. Crazy times. But what I journal is a different TP that is further away. So my targets are always based on my statistics. A statistical target is what I use. It's completely static, not based on price action. But what I am journaling is what if I take if I take my profits at the next key area on a chart. That's what I call my discretion TP, which is this key swing low, which lines up with all these equal lows in the markets. And then I'm simply filling in, did my discretion TP get hit? And if I notice over the next 100 trades that when I take profits, 9 out of 10 times my discretion TP also gets hit, I'm going to increase my target size, and that way increase my performance. So you always want to be journaling that. So that's a quick tip right there. Now, why did I take shorts? Quite simple. Long term, I'm bullish on this. Don't get me wrong, I'm bullish, but look at what we did. Took out 2 major equal highs on the weekly, and we rejected very aggressively. And if we go and zoom in a bit, we see that we have a lot of equal lows below market. And what I always speak about, if one side of a range gets a false breakout, price tends to move to the other side. So that all lines up with my mechanical setups that triggered twice after that false breakout. So after we got the false break, my mechanical setup triggered twice to get a short in. So I shorted twice. I always follow the plan. And because of the confluence of the false break and the range low, I risked even more on those 2 trades. And I don't recommend that to beginners. But because I've been trading this strategy for so long and I've been journaling for ages, I know when my edge works better. So I kind of risked around 1.5 times more than usual on this particular trade. And they both hit target, which is great. But the thing is, you need to know when your edge works well. I know that when certain behavior happens, so when we have a false breakout, when it lines up, and then when I get my setup, I know the odds increase. I know that this would have been the best target to go for, but I also know that I don't have enough data yet to confirm this as the best target. So I stepped out here, took my profits, journal this, and to see if I can potentially improve my edge in the future. Now, before I'm going to end this video, I quickly want to talk about not following the rest. And I've done that again in previous videos. But when I shorted in this particular area, and I also shorted here with quite a wide stop, my stop was anywhere around this area, which was well over 200 pips. People will be saying, oh, you should trade with smaller stop losses. Why are you selling after this big move and range is happening? We are going up, we're going up. We also hit support, so you can expect a new leg up. And that's where you really have to think, who is talking to me? Most people lose money. And if everyone is telling you that they're buying here because of support and we had the big candle, then you should not be buying, plain and simple. I always follow my plan. And if my plan tells me to have a 3 on a pip stop, I'm putting in a 3 on a pip stop. If my plan tells me to put in a 10 tick stop, I put in a 10 tick stop loss. If it all fits in my plan and it is the way that I back tested it, I know I'm going to make money in the long run. People called me crazy when I shorted here twice with additional risk compared to my normal trading. But to me, it was just common sense. I had the confluence of the false breakout. I had my setups here. I had people going long. So usually when everyone is long, I know they are wrong and that I'm in the right place. And that's it, guys. And it all worked out. And now we have some ranging, but I do expect the market to quickly take out these equal lows as it usually does. So that's it for today's video. I wanted to go over the markets really quickly on some of the pairs I trade because I haven't done it in a while, discuss some trading with you and gave you some tips that hopefully you can use as well. Now, if you have any questions, drop a comment down below. If you like the video, please leave a comment and subscribe. That would really, really help me out to grow the channel. So thanks for watching, guys, and I'll see you in the next video.